Hey guys, Drew Rice here, and I hope everybody watching is doing well amidst everything that's going on. But in the last few weeks, the market has been dropping like crazy. And the amount of fear, uncertainty, and doubt have people selling and pulling out of the market without even a second thought. But it's important we don't let this fear paralyze us in our decision making. While we may be anxious and we may be very uncertain about where the market's going to be in the next month or where the bottom is going to be, one thing we know historically is that the market will eventually recover. And right now, when everybody else is running for the hills, is the most crucial time to make sure that you're investing. Had I been old enough and able to in 2008, I would have been buying like crazy because that's when you want to. The gains people are able to get by buying in big market downturns like right now are going to vastly improve the performance of your portfolio over the long term. There's so much fear that there are a lot of people that are actually cashing out of their 401ks because they're so worried about losing everything. Personally, at 26, I know that I have a long enough time horizon that a market downturn right now is not really going to make or break my retirement account. So for my retirement personally, I haven't really made any changes. I just continue to put money into the S&P index, mid-market funds, and bonds, and even increasing the allocations of those just a little bit. However, in addition to my retirement, I had been keeping quite a bit of cash starting in January on the sideline because I kind of had a feeling that there was going to be a pretty big downturn, and I'm glad that I did that because I've been buying up a ton of individual stocks in the meantime, in addition to my retirement account in a separate brokerage account, because there are so many good deals right now if you're a long-term investor that I just can't help myself. But at the same time, I want to be able to withdraw that money before I'm 59. For buying stocks, I use a couple different brokers. Like for my retirement, I use Fidelity because that's what I have through work. And on the side, I do most of my investing with brokers that have really good mobile platforms and charge zero commission fees. Today, I wanted to show you one of those apps that I think is really good, but might be a little bit intimidating to a person just getting started without some type of walkthrough. The broker I'm talking about is Webull, and I really like Webull. While I've definitely used Robinhood a lot in the past, and I know that that's one of the favorites of people on YouTube, and I do think that Robinhood is one of the best for a person just getting started because it's a very simple platform. The user interface is very easy. I actually now prefer Webull because I really like the fact that I can do all of the research on stocks on that platform without having to really look outside of it if I didn't want to. Now, I do a lot of research outside of the broker and the apps that I have for actually investing. However, it's really nice to be able to look at all the different financial charts and different statistics that are available on Webull whenever I'm looking to buy a stock. And it's a good way for me to make, quicker decisions on, is this something that I want to look deeper into after doing a cursory glance? And even better, one thing that I have really had an issue with when it comes to using Robinhood in the past is that they don't have an IRA option, but Webull does. So if you've been watching my other videos, then you know that opening a Roth IRA is one of the best decisions you can make as a young person when it comes to long-term planning and investing. And you can even do that through Webull. And if you need another reason to use a broker with no commission fees, a great mobile app, and a ton of information available at your fingertips, then they're also going to give you free stock if you sign up with the link in the description box below. So be sure to check that out. And after I do this walkthrough for you, you'll have a better familiarity with the app. And if you're interested, be sure to use that. So now let's take a look at the app.
Okay, so when you first go into the Webull app, this will be the first screen you'll see, and this is my watch list. So for anyone that's unfamiliar, a watch list is where you will add different companies that you are interested in buying at some point in the future, and that way you are able to more directly see when they have changes, get alerts, and be able to get a good buy-in point as opposed to having to look for that all the time. You can also set it up to show your positions, but I prefer the watch list because I'm always looking to buy new stocks, so that's what I want on my front screen. You can also click on the markets, and you can see the Dow Jones, the S&P 500, the NASDAQ, and you can see how they are moving as a whole. Also, say you want to find a ETF that's tracking one of these indexes, well, you would select, say, S&P 500, and then you would tap on the graph area, and then you have the S&P index right here. And then you'd scroll down, and you'd slide over to ETFs. And so these are lists of different ETFs that all contain companies within the S&P 500. So that's a cool thing if you're just looking for ETFs. When you're back on the Markets Explore page, you're able to scroll down and look at gainers and losers by, a year, a day. Very, very good to have if you're trying to screen stuff. They also have a really good screener on their desktop version of this app. You can see most actively traded. You can see a bunch of different ETF options that are currently a high volume, if you're interested in that. And then you can see the best performing industries. So this is a good option if you're looking at which sector to start finding companies to invest in. And you can see in the 3 month, the 1 month, 5 day, 1 day. And then you can go to this community tab. I don't really use this. It's a place where people can, put up posts about what they are buying or what they're interested in or what they're looking for. But what I'm more interested in is the banner up here at the top where it has the Webull paper trading competition. So if you're someone that's new to trading, paper trading is a way where you can practice trading with essentially what's like monopoly money, where they will give you a set amount and you are then able to use that money to try to invest and buy company shares, so that way you can practice trading stocks and see how well your strategy works. And then if your strategy is working well, maybe you want to start risking your own money. But I definitely think paper trading is a great way for people to get started if they aren't sure of what to do. And for now, we're going to ignore the menu option and the center because those are both my personal account information. And let's just show you one of my favorite things about stocks on Webull and how you're able to evaluate them. So as an example, the airlines and travel industry have been doing really poorly lately because of the current situation. So let's say I want to get in on that. And so let's look at, say, Southwest Airlines up here at the top. So when you click to look at a stock, this is what you'll see in the Webull mobile app. As you can see, the price is $32, and this, it's gone down 30% in the last 5 years, but as you can see, it's gone down 40 in the last 3 months because of this late slide. So as I'm looking at this chart, I can see on any of these given time horizons, the max, the 3 month, the 1 year. But what I want to look at really is the 3 month right now, just to see how far it's fallen. As you can see, it's down to under 5 year lows. As you can see when you look here, it's below its 5 year low. So the question is it worth that? Well, this is going to take more analysis than I'm going to do right here, but here's where I like to start. I go down here where I see quotes. And the main thing that I'm looking for, you have things like news, which is really good if you're someone that is trying to learn more about the stock. You can find a lot of different articles. I generally don't use the comments feature. This is again a place where people are able to comment, kind of like a social media aspect. Analysis I'm not really big on. I mean, the analyst rating may be helpful if you're very early, but in general, I don't find it to be, what I look for. Instead, what I look for is the financials. So, especially at a time where there's a lot of economic uncertainty, I like to make sure that the balance sheet looks good. And so as you scroll down, what I'm looking for is right here, the balance sheet. So, my main concern in uncertain times is what is the debt to asset ratio. So what I'm looking at here is I can see, okay, well, their debts not, their liabilities or debts are not outweighing their assets. Their debt to asset ratio has gone down and then stayed flat for the last 3 years, both decent signs. Now let's go down here, and this is what I really like about Webull is this peer comparison. So now I'm able to look at Southwest as an example versus other airlines, so I can compare companies in the same sector and get a better idea of where does this rank among its competitors. So when you're looking at stocks, the first thing that people tell you to look for is the PE ratio, which as you can see here is 8.55. So for those that don't know, a PE ratio is the price to earnings ratio. So what this is looking at is the ratio between the current stock price and the earnings. That way you can see whether or not a company is over or undervalued given its current earnings. The average PE ratio, the average PE ratio across the market is about 15. So anything below 15 in that PE ratio is considered underpriced for its earnings, and anything above that is considered overpriced given its current earnings. That being said, PE ratio is not the only way to evaluate, but it's a good starting point. And the reason it's not the only way to evaluate is because sometimes, say you have a company that has a lot of growth, it may have a very high PE ratio, but that's because people are buying it and it's being priced in that high because of its potential in the future, not because of its current earnings. Let's see, so the 8.5, that looks really good just from a general starting point. It's definitely something that I'd be interested in. It has a dividend, which is always good. You definitely want to make sure that that dividend's not cutting into their cash flow. 1.9 is nothing exceptionally high, so I'm not really as worried about that. But let's look and see. Well, they have this 62% debt to asset ratio, and they're ranked 5th in the airline industry. So let's go and see how they compare. This is what I really like, is you click on the debt to asset ratio number, and now I can see all the different companies in that sector, and I can see where they rank. So let's look at, say, Delta Airlines as an example for comparison. So Delta, as we can see, in the last 3 months has dropped, instead of 40%, with Southwest has dropped 64%. So that means there's a lot more upside potential of it getting back, if it's able to get back to its all-time gains. So let's go and see how their financials look. So then I'm scrolling down. I can see that balance sheet, that looks a lot more, but it's gone down over time. Then I'm looking down here, and I can see, okay, well, they have a P ratio of 4.6, which is insane. They have a 4.46 dividend yield, which is pretty solid. And then their debt to asset ratio is 76, which is higher, but for an airline, you have to expect that it's going to have a higher debt to asset ratio than most other industries. So this is just the general look that I give. This would be a company that I might be interested in because I like the dividend. I like the debt to asset ratio is not completely out of control, and that the PE ratio is pretty low. And to give you an idea of what I'm looking for with this debt to asset ratio is I just want to make sure that they're not way over leveraged. So like as an example, let's look here at American Airlines, because that's one that I've been kind of interested in because it's such an attractive entry point with, again, 64% down in 3 months. But when I'm looking here, I get worried when I look at their financials, because when you go down to their balance sheet, you can see their liabilities are completely above their assets. The problem when you have here is that dividend is probably not going to stay around because this company is not running in a way where it has excess. And with demand decreasing over the next several months, I don't see that this is something that's sustainable without some type of external help. That being said, the PE ratio is even better, but again, there are other things to consider, and to me, this is a higher level of risk than I would be willing to carry when there are other options available. So now let's say I want to get into a position, and let's say I think McDonald's is a really good buy right now. So I'm going to go click on McDonald's. I'm going to hit trade, put in my password or fingerprint in this case, and then you can set either a market buy, which is where it will buy at whatever the current market price is. So in this case, 148.51. When that is placed, but that doesn't always mean that it's going to be the price that's quoted to you right now. There's always a little bit of a delay, so that's why I really prefer to go with limit buys. A limit buy is where I can input the amount that I want to pay, and I won't pay any more than that limit price that I set. So if it never goes down to that limit price, then I won't ever get that stock. But this is a safer way, especially in highly volatile times like right now. The other day, McDonald's was down at 138, so let's say I want 138.50, right? And let's say I want to get just one share for this example. And let's say my time in force, we'll do it in a day. And let's hit buy. And then it's going to come up with all the pertinent information. And I just hit confirm. And there we go. And that's how easy it is to buy stocks on Webull.
So I hope me walking you through the app like that helps you feel less intimidated to get started investing today. And don't forget, whether you use Webull or not, that the most important thing is that first, you make sure you have an emergency fund in times like right now, because that is very vital, and you need to make sure that you have cushion and that you're investing with money that you don't need to get by in the short term. So if you have questions about that, be sure to check my other video linked up above about emergency funds and what those are and how to build them. If you do decide to use Webull, don't forget, let me know in the comments down below after you use the link in the description box. Let me know what stock you get. And can't wait to hear from you guys. I will definitely be going over some other brokers in the future, and I'll do a walkthrough of Webull's desktop app as well, so that way you can see how to do it on your laptop as opposed to just your phone. And I definitely encourage you, check it out, but no matter what, make sure that you don't wait and that you take advantage of this time, because now is no better time to get started. Do not regret that you didn't invest now. Thank you guys so much for watching. Really appreciate you. And everyone stay safe. Make sure to invest. And I will see you guys next time.